Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the pair that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. The pair that I want to speak about into this video is GBP AUD, and the reason for which I want to speak about GBP AUD is because the pair is very near to providing to us another good opportunity, and now the market has created exactly the move that we wanted to see from our previous analysis. So that is why it's time to make an update and see where we can be looking for the next opportunity on the pair. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about this market from a technical perspective. We will then go and see what we have from an order flow perspective on the pound and on the AUD by checking the commitment of traders, which is what hedge funds are doing in the market. And if you're able to track what the biggest banks and institutions are doing in the market by reading how they're moving their orders in time, you do have an advantage over your competition in the market. So without further ado, let's get straight in the video. Now, starting here from the monthly time frame, what we can see is that the market has just reached a quite important demand area for this market. Now, why is this zone a strong demand zone? The reason for which this zone is a strong demand zone is because starting from here, the market had created all this move to the upside. And now the market has tested multiple times this zone here. In fact, not only the market had respected and rejected this area to the upside from here, it did it again here, rejecting the zone to the upside. It did it again here, rejecting the zone to the upside. And currently, we are inside of this strong monthly demand zone from which we can easily expect the market to provide another rejection to the upside. So at the moment on the monthly, we are inside of a strong demand area, and we can expect the market to provide from here a nice rejection to the upside. Going down on the weekly time frame, what do we have? Now on the weekly time frame, what we have is a market which has just provided a quite strong impulse to the downside, followed by this correction, and the market has already started the continuation to the downside. Now, generally speaking, after an impulse and a correction, you usually expect the market to provide a continuation to the upside, specifically for the creation of a lower low. However, at the moment, what we can see is that the market is still above the previous low. In fact, exactly from this area here, the market has started all this move to the upside, and currently we are testing exactly the same zone from which we can expect the market to provide continuation to the upside. So at the moment on the monthly and weekly time frame, we are above the demand, but on the weekly time frame, we have already identified that we have an impulse, a correction, and after an impulse and a correction, you expect the market to create a continuation to the downside, possibly for the creation of a lower low, which would also make the market create a lower low on the weekly time frame and break below the demand that we have just identified, which is this previous support here, now again acting as support here. So on the monthly, weekly, price action is very clear. Going down on the daily time frame, what do we have? Now, from a daily perspective, I have spoken about GBP AUD quite a few times in the past. I spoke about the GBP AUD after this W formation. I made a full breakdown of this pair when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the downside. And that is exactly what the market did. Then I spoke about GBP AUD again after this overextended W formation, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside. And again, that is exactly what the market did. Then, after the market created this overextended M formation, I made another breakdown when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the upside. And again, that is exactly what the market did. Then I spoke about GBP/USD after this M pattern when the market was at this level, and I made a full breakdown explaining all the reasons for which, from here, we expected the market to create this move to the upside. And again, that is exactly what the market did. Then we had this massive impulse to the downside, and when the market was at this low, I made a full breakdown explaining all the reasons for which we wanted to see the market create this move to the upside. And with the very last analysis after this overextended M formation here, I made another breakdown explaining all the reasons for which, from this low, we wanted to see the market create the move to the upside that the market has just created. And by the way, I will link in the description all this previous analysis. So you find all this previous analysis linked in the description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for GBP/AUD? Now, starting here from the daily time frame, we have already seen that the market had created this M formation and created this retracement, but after an overextended M formation and a retracement, what you actually have is an impulse and a correction. And after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that the market has just retraced exactly to the 0.618 of the Fibonacci taken on this impulse, from which we can definitely expect the market to provide a continuation to the downside, possibly for the completion of this impulse correction and impulse pattern to the downside. So on the daily time frame, we are testing resistance, and from a pattern perspective, we can expect the market to provide a continuation to the downside and create a lower low. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, on the pound, what we can see is that with the last reports, hedge funds have started shifting their positioning again to the negative side. In fact, we went from having 6K net positions all the way down to having 3.6K net positions. So shorts overall are more or less remaining unchanged, but what we're seeing is that longs got decreased from 37.5K to 35.5K, and shorts overall got a little bit increased from 30.9K to 31.8K. So with the last report, we can clearly see that 958 shorts got opened and 209 longs got closed. So overall, the pound is starting to get a little bit weak. Therefore, there is the possibility to see the market complete this impulse correction and impulse pattern to the downside. If we go and see what we have from an AUD perspective, what we can see is that overall on the AUD, net positions have started increasing. We went from having minus 10.8K net positions all the way up to having minus 3.9K net positions, with shorts reaching 63.6K. However, at the same time, longs are getting increased more than shorts, and that is why net positions are increasing. In fact, we have now reached 59.7K long positions. So overall net positions are starting to shift to the positive side, and possibly if we start seeing shorts getting closed, what should happen is that net positions shift again to the positive side, which would be great, because if we actually see that the AUD is getting strength and the pound is losing strength, weak pound and strong AUD is exactly what we need for this move to the downside. So how we will be approaching this specific situation with students. Now, as usual, the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market, combined with the COT data. But the best time frame when it comes to confirmations and entries is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective inside of this area. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And only if the market will shift from a 4-hour bullish to a 4-hour bearish market, only at that point we will be adding GBP/AUD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and create a lower low. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.